Corporate Finance Excel Practice Problem. In this presentation, we're going to work a practice problem in Excel related to cost of not taking cash discount calculation. Get ready, it's time to take your chance with corporate finance. Here we are in Excel. We have our information on the left-hand side. We're going to populate that information into our worksheet on the right-hand side. The information we have in the left is going to be the payment term. So we're going to assume that we're a customer, that we purchased something, we're a business, and we purchased from another business on account. So we purchased something on account. Then we have the payment terms here. These are going to be the different payment terms we want to take a look at. We want to analyze what this means, what this terminology means in this format. What does that payment term mean? And then once we know what it means, we want to think, when do we want to pay these items off? When's the best time for us to pay them to maximize our cash management type of strategy? So what we have is what would be the cost of not taking these discounts. So there's going to be a discount related to these payment terms. So let's kind of break this up. So if we see something like 1/15, comma, and it might even just not even say net, it might just say in 30. So that's going to mean that the first number is going to be the amount of discount, which would be what we would call a cash discount, because this is typically going to be a small discount, not something you'd see in a retail store, which you might see like 20% off or something like that. This is going to be something below 5 generally, because it's a small discount in order to incentivize people to pay within cash earlier. So it's not there to incentivize the sale in and of itself necessarily. It's there to incentivize, mainly you would think if you're dealing from business to business customers, the customers that are buying from using cash management strategy to just pay you at the end of the term and instead pay you a little bit sooner. So that's going to be, now notice it says 1, it doesn't say 1% or anything like that, but we assume that 1/15 under this context would be 1%. The slash then 15 means if you pay within 15 days. So 1/15, 1% if you pay within 15 days. Then in or net 30 means if not, then you pay at the end of the time frame that would be our standard financing, 30 days. So if it was to just say, for example, net 30, then we would have no cash discount that would be tacked onto this. And if we were the ones paying this and we were trying to maximize our cash management strategy in terms of payments, we would wait till the end of the 30 days exactly if we could, and then pay it at the end of the 30 days. However, if someone was to give us a benefit of paying earlier, say within 15 days, then we might change that strategy and then take up and pick up the payment within 15 days so we can take advantage of that small discount, which hopefully will most likely be enough for us to move from a strategy of just waiting till the end of the time period to paying within that time frame. So let's just write out what this means first. So this is going to be the discount. If you pay within so many period, pay within the days for the discount, paid within days with no discount. So in other words, if I was to write this out, 1/15 in 30 is going to be, I have a 1% discount, 0.01, 1%, and I'll change that to a decimal home tab numbers group, percentifying it, 1% if you pay within 15 days. And then if you don't pay within 15 days, you got to pay within 30 days, net 30. And if you don't pay within 30 days, then you might have collection action or penalties that could apply at that point in time. Next one, let's do this one, 2/19 in 45. That means you get a 2% discount. Let's percentify that, home tab, numbers group, percentify. If you pay within 19 days, -19, net, if you don't pay within 19 days, you still have to pay within 45 days. You will not get the discount at that point in time, but if you don't pay within 45 days, you may be subject to penalties and other further collection action. Next, we have 3/10, net 60. So, of course, that would be 0.03 or 3%. Percentifying this would be home tab, numbers group, percentify. So 3 if you pay within 10 days, 3/10 net. If you don't pay within 10 days, you got to pay within 60 days. Otherwise, their collection action could happen. And then 4/18 net 1/15 would be 4%. This is getting pretty high for a cash discount. Home tab, number group, percent. So again, this isn't like a retail store discount. This is a cash discount. 4% is probably at the upper border of what you will see with a cash discount. And this is going to be paid within 18 days. If not, you're going to pay within 115 days. That's a little bit more unusual. This term up top, something like these are probably a little bit more on the standard type of terms, even down to here, although 3% is getting a little bit high as well. Now, if we were to consider, okay, is it a good idea for us to take this discount? Well, what we'll do is we'll use this calculation. It's going to be cost of not taking the cash discount type of calculation. It's going to be this item down here, or this discount calculation down here. The answer to this is going to come out to a percent, which can look a little bit abstract. But when you think about it, if you're thinking about financing the purchase of something, the question can be, if we were to finance the purchase of something, what might the interest rate be compared to with regards to the financing option for us to get the money to pay off the loan early, and compare that interest rate to the percent that we're going to be deriving here. We will make this a little bit more concrete in a future presentation as we actually put together an example problem and work through the example problem. Right now, we just want to concentrate in on this formula and calculating the formula. So the formula is going to be cost of not taking the cash discount. We've got the discount percent over 100% minus the discount percent times 360, which is going to be the days in a year, which is going to be, rather than 365, we're using 360, which is we're going to assume even 30-day months times 12 months, 360, divided by the final due date minus the discount period. Meaning, for example, here, the final due date being 30 minus the discount period of 15. Now, if I was to break this kind of complicated type of formula up into, say, a table format, like if we were going to do this in like a tax return or something, that's what I'll do here. You can obviously just plug these numbers into the formula in this way as well, and work the formula algebraically. I think it's useful oftentimes to plug this into a spreadsheet. If you do plug them into a spreadsheet, you get practice put in the spreadsheet together, and you get practice put in a worksheet together if you were actually going to do this in practice, and then adjust your payment terms to then see different scenarios with that worksheet. So let's work this out. I'm going to say, okay, I've got two items that we're going to multiply together. I want to basically have the outer column. I'm going to get the outer column over here to then have these two separate items that I'll then multiply together. So the inner column is going to be what I need to work the each individual item. So let's do this first part of the calculation, the discount percent over 100% minus the discount percent. So let's say, all right, we're going to have then the discount percent. So discount percent tab, and that's going to be equal to the 1%. I'll put that on the inside. I'm going to format this, go into the home tab, numbers group, percentifying it, and then this is going to be 100% minus the discount percent. So 100% minus the discount percent. So 100% is 1. So 1 minus the discount is 1%. Now, it's a little bit tricky. Excel should be able to pick this up, even though this cell is in the format of a percent. This cell is not currently in the format of a percent. This 1 is 100% as a decimal format. So if I do that, I'm going to say, okay, 1, and then I'm going to percentify it. Home tab, numbers, percentifying it, 99%. That's what you would expect. 100% minus 1, 99%. Then we're going to have a subtotal. I'm just going to call it subtotal. And I'll put this in the outer column. This is going to be equal to this divided by the 99. Now, I'm going to add a lot of decimals here and percentify it so we can see this a little bit more clearly. Home tab, numbers, let's percentify that. Let's add a few decimals because this is going to be a fairly small or repetitive number. I'm going to indent this item. Let's just indent here, home tab, numbers, and increase the indenting. So now we've done this half. We're going to multiply it now times this half. So we're going to multiply it out. I'm going to say, all right, the days in a year, and we're going to assume 30-day months. So 30 times 12, that's where that 360 is coming from. And then we're going to say that's going to be minus the final due date minus the discount period. So for this item, it's 30 minus 15. So, right, because it's going to be due in 30 days minus the 15 days. So that's going to be the period that would be affected by basically this discount period that we'd have to pay early. So let's put some underlines here. Home tab font group underline. I'm going to put an underline here. Home tab font group underline. I'm going to call this a subtotal. We'll just say subtotal. And this is going to be equal then to the 360 divided by the 15. And so there we have that. And then we can indent this. Home tab alignment, increase the indenting. This is going to be the cost of not taking the discount. The cost of not taking the discount then being equal to this number, this percent, times that 24. And let's percentify this. Home tab, numbers, percentify, adding a few decimals, putting an underline under the 24, home tab, font group, and underline. So there we have it. So the 24.24. Again, what does that mean? You could think about it in terms of if you were to finance this and say, okay, I'm going to finance it so that we're gonna take a loan out 15 days earlier than what we normally would, so that we can take advantage of that 1% discount. Would it be worth it for us to do that, or would it be better for us to simply wait until the end of the 30 days if we had to finance it at that point in time? And if you were to have a loan that you would be taking out for that period of time, the 15 days, that would have a percent that would be less than the 24.24, then you'd think it would be worthwhile to do so. We will make that more concrete in a future presentation. Here we're going to practice this calculation a few more times. So now we're on the second one. So we have 219 net 45, 2% discount if you pay within 19 days. Otherwise, you got to pay within 45 days. We're going to do the same calculation up top, and we're going to use this same formula. So same kind of thing. I'm going to say, all right, this is going to be equal to the discount percent. I'm going to do this first half of the calculation first, and I'm going to do that in the enter column. This is going to be equal to then the 2%. I'm going to percentify that, go into the home tab, numbers, and percentifying it. And then we've got, I'm going to say, hold on a second, undo. I'm going to undo that. And then we're going to say this is going to be the 100% minus the discount. I'm going to just equal that item. This is going to be then 100%. I'm just going to say 1 minus the discount of the 2%. So 1 is 100% in decimal format minus 2%, which is 0.02, is going to give us 1. And then we'll go home tab, numbers group, percentify it, and we're getting to the 98. The 98. So then I'm going to divide that out for our subtotal. I'm going to say, all right, then the subtotal is going to be in the outer column to get this first half done. This is going to be the 2 divided by the 98. And then let's percentify that. We're going to go home tab, numbers group, percentify, adding a few decimals so that we can see it. It's going to be a longer number typically. Home tab, alignment, increase the indenting here. Second half. Now this half, we've got the days in the year. So we're going to pick up the days in the year, which is going to be equal to 30 times 12. And then we're going to have this equal to the final due date minus the discount. So the final due date is 45 days out, but we can take the discount period within 19 days, and if we do so, we get a 2% discount. So we're going to say we have the 45 days minus the 19 days. That's a difference of 26 days time period that we're talking about there. And let's have another subtotal, which is now going to be equal to the 360 divided by the 26. That'll give us our 14. And let's make sure, see if that's rounded. Home tab, font group. Let's add a couple decimals just to check it out. Let's add some decimals up here too. Home tab, numbers, and just add a few decimals just to make it even. And then we're going to have this equal to the cost of not taking the discount, and that's going to be equal to this 2% about times the 14 something, or the 13.89. Let's percentify this. We're going to go home tab, numbers group, percentify, add a couple decimals, and there we have it. Let's underline a few things here. I'm going to select this item. I'm holding down Control to select non-adjacent tabs. I want to underline here, an underline here, an underline here. You can do these one at a time, but I'm just going to do them holding down Control, home tab, font, and underline. Okay, so this one, 28%. So again, if we were to finance it, if we were going to say, hey, if I had to take out a loan to get the 2% discount earlier for that time period, for the 26 days, which is the difference between, you know, the last day I can pay within the discount and the days that I would have to pay if I didn't take the discount, then if I had to get a loan for anything less than 28%, you would think it'd be worthwhile to do so. So let's do it again. We're going to go, okay, I'm going to make this a little bit smaller. And so we can see these items. So now I'm going to move to this one. Same kind of process. So I'm just going to do the same calculation 2 more times. It's going to be equal to the discount. And then I'm going to say tab. Let's go ahead and format the entire thing at one time this time. So I'm going to select this whole thing. Let's do this. Let's actually say this is going to be equal to this one. And then let's autofill it down. Home tab. I'm going to put my cursor on autofill, drag it on down. Then I'm going to format paint the entire thing. I'm going to select this entire box. I'm going to go to the Home tab, Clipboard, Format Painter, Format Paint the entire box. So there we have it. And then we can do our calculations up top. So we're going to say now we're talking 3% on the discount. So this is going to be equal to 3% for the discount. The 100% minus the discount. So this is going to be equal to 1 minus the discount of that 3%. 1 minus the 3% is the 97%. Dividing this out, this is going to be equal to the 3 divided by the 97. That's the first half of our calculation we did over here, just dividing that out, just doing the algebra. And now we're going to pick up the days in a year, which are going to be equal to 12 times 30, assuming we have nice even 30-day months for our calculations. And then we're going to take the final due date minus the discount. So if you pay within 10 days, you get the discount. But if you don't pay within 10 days, you got that 60, you can pay within 60 days. So this is going to be equal to the 60 days, the final pay period, if you don't take the discount, and the 10 days, the final day you can pay to take the discount. So we have 50 days then. If we then divide this out, we got the 360 divided by 50 days. We got the 7.2 about. Then we'll multiply this out. So that's the second half of our calculation. So we'll multiply this out. This is going to be this number times this number. So we have 22.27. So once again, if we think we can take a loan out to pay within the 10-day time period or at the end of 10 days, and then we'd have a loan for 50 days that we wouldn't have had to take if we waited out that 50 days, but we get to pay less, 3% less to do so. If we took out a loan to do that of any interest rate below the 22%, then you would think it'd be a worthwhile endeavor. Let's do it again. We have a bit more of an extreme example here, a higher discount rate, but we're going to pay within 18 days, and then you got a much longer period before the final due date is, which is going to be that 115 days. So let's do the same thing. I'm going to say this equals the discount percent. I'm going to format that all the way down. We're going to highlight this or autofill all the way down. Let's then use the paintbrush to then format paint. So I'm going to select the entire blue area. We're going to go to the Home tab up top, Clipboard, paintbrush it, and then we'll paintbrush this entire thing. Then we're going to be picking up our numbers, which is going to be a 4% discount if you pay within 18 days. If not, you got to pay within 15 days. So we're going to have the discount being the 4%. Then we have the 100% minus the discount. This will equal 1 then minus the discount of 4%. 1 being 100% minus 4 or 0.04. Which is going to be 96. If we divide this out, this is going to be equal to 4 divided by the 96. And so that's our subtotal. And then we have the days in a year, which is going to be 12 times 30, 360 days. Now we've got the final due date minus the discount. That's how long of a difference we have in the periods of when we would have to pay. That's going to be the 115 days, the last day you would have to pay to not take the discount, minus the 18, the last day you would have to pay to take the discount. That's 97-day time frame or time period. Let's go ahead and indent this one. I'm holding down Control, selecting these two cells, and I'm going to indent both of them at the same time by going to the Home tab, Alignment, increase the indenting. Then we're going to say this is going to be equal to the 360 divided by the 97. And finally, we will take the cost of not taking the discount being equal to the 4.1667% about times the 3.71, and now we're at 15. So obviously we have a longer time frame. The discount was higher here, but we have a much longer time frame being able to not pay if we don't take the discount to the 115. If we were financing this and we needed to finance this to pay within the discounted time period, then as long as we're financing it with a loan that was below the 15%, then you would think it would be worthwhile to do so. Next time we'll take a look at some examples where we actually have an example of us basically thinking about a concept of us financing it, and we'll kind of prove this calculation in the future presentation.